All right. And what day is it today? I've lost count of the days, Kurt. I don't even know.
April 19th, Pete.
April 19th. So tomorrow's 420. Insert joke here. And yeah, this is the roundup. We're back at it. It's sort of weird though. The nights turn into days, the days turn into weeks, and I feel like I've been quarantined in my house now for no reason other than I'm being a good citizen for years, and I don't even know what goes on anymore.
I think we're all envious of the people in Florida who got to go walk down the beach yesterday, which was through all the media. So, yeah, interesting times for as we come sort of post the first flush of home quarantining. Now we're 4 weeks in.
Yeah. It's sort of funny, right? You don't want to talk COVID all the time, but this is what's shaping everything in terms of news and events. I mean, yes, regular stuff is going on with the world of insurance and everything. And yes, business continues on, but not without challenges due to COVID. And I think one of the things that's coming up here is Canadian Underwriter is putting on a webinar for COVID-19 strategies, I guess, on Tuesday. Free one. Everyone can sign in. It's supposed to be about 45 minutes. Do you remember who's on that panel?
Well, I know Graham Haig is, and I know his advice often is free. So that should come at no surprise. But who were the other two gentlemen on there?
It's Steve Whitlaw from Applied Systems. Joe Carnevale, who is the current IBO president, nice guy, smart guy, a really great speaker. So I always enjoy listening to what Joe has to say.
I think you like Joe. I think you like Joe because he complimented you.
Yes, he did. He's an instant friend, just because of that.
Well, Pete, it's pretty obvious when people throw you a compliment that they become an instant friend of yours. So we've all witnessed that. But needless to say, it's going to be an interesting chat. I love the format. Online, a lot of these type of things you used to have to fly to different cities to hear, and here we are now able to tune into something.
Yeah, it's taking advantage of what technology people are using right now to conduct business, where you work in a team and stuff, and why not do some education, throw out some ideas out there. I mean, the one thing about insurance, right, is you're not in this industry without caring for people, and we should also, or let me rephrase that. Insurance brokers and agents have always cared for the well-being of each other, even if there's some people in the industry you don't care for, maybe you don't agree with their business tactics, but we still want everyone to survive because there is sort of an element of, a common enemy element to the industry. What else is interesting right now is we're still talking a little bit about the hard market, and you would think that would kind of get pushed away from topics right now, but it's starting, we're back to talking about it.
Yeah, it's interesting. I mean, you interviewed a gentleman from KBD Insurance in Montreal.
Curtis Killen. Yeah.
And, he's been picked up again on the Canadian Underwriter. Curtis has very direct approach to the topic. And I think he brought it up on your interview, which great to see it now on Canadian Underwriter. Maybe a little bit of IPC influence here on the larger press people in our industry. But, he's got an opinion. He thinks let the markets do their thing. Others are saying, no, we need to step into the reality that we're seeing a major push on businesses and individuals' lifestyles here, and we have to alter the hard market route that was taking place in the industry. What's your thoughts, Pete?
Well, there's a little bit of both. The hard market wasn't fun to begin with because it was just a lack of capacity for a lot of different classes of risks. And combined with things like the emergency endorsements that are coming into play right now, companies not wanting to cancel people for non-payment, it's sort of a combination of what's the best thing for the client, because you can't really shop around. And if they haven't made a payment or they're asked for some sort of payment amnesty and they've been granted that, can you even move them when they have money owing to someone else? There's all these different variables at play here that I don't think anyone really anticipated it all happening at once in this capacity and across a country, a continent, and the world. There's nowhere you can look where there's some sort of safe harbor where it doesn't matter. You're hearing these kinds of stories out of everywhere.
But if you suppress premium increase, forget about just the recess we're taking on collecting. But if you suppress premium growth, like Curtis said, at the same time, you've got insurers who are taking massive hits on their investment portfolio. We saw Fairfax release, $1.5 billion lost in their investment portfolio. Where does that leave us in 2021 when all this now settles back in? Let's hope life's back to normal, vaccines hit the ground, what have you. How big of an increase are we going to see then?
Yeah, that's the thing. Are we just delaying a pain point? So
and then it'll also delay, but also delay and multiply on top of what didn't get done in 2020, which if the markets are correct and they did need to see those increases, wow, now it's increases plus
2021, right? 2021 increases could be outrageous depending on what happens. Let's hope in the U.S., our friends down south, that the hurricane season is basically non-existent when it arrives. We can't have any forest fires in Canada, and we don't need any flooding either. As you and I look out or walk around our city and see a river that's almost over the banks in two places, like there's a perfect storm of stuff going on. And court case is going to be filed here against insurers for BI claims. Right.
So do they have to record those potential losses before it's settled in court? I'm no expert on how insurers have to bank this stuff as far as their accounting goes. But if we have a listener who is, feel free to comment on our page.
Yeah, comment on the Facebook page. Also, but thinking about that, insurers are really quick to put the reserve against the broker's profitability on the loss ratio, right?
No.
Yeah. How fast are those going to come onto broker sheets when you're looking at your quarterly reports? Oh, well, the claims ratio has gone up because we've just happened to maybe put these reserves out for the 68 BI claims that could come in next month.
Mm-hmm.
Right?
Very interesting. Yeah.
You wonder. But BI is still an issue. It's still being talked about. There's certainly inconsistencies out there. And one of the things that we noticed through our brokerage that I work for is that there are niche programs out there where no one knew there was BI coverage for this kind of thing. And now we have a client who's insured with us and another business in another niche program through another broker where they're getting paid out on BI with one policy and not the other. And the policy is underwritten, both policies are underwritten by the same company. So who's at fault here? We're not the only one. This is going to happen elsewhere.
And knowing how consumer-centric our legal system is towards, the big player against the little guy, you're likely going to see some judgments here go on the side of the business owner who's saying, how am I supposed to know if I have one and not the other? And I can't see why a judge would ever rule in favor of the insurance company here.
No, exactly.
It shouldn't happen, really.
No. Speaking of different things when we're talking about impact of COVID and stuff, one of the things that is coming up now, and I think a lot of businesses are working on it, and it's probably going to be a conversation, that webinar via Canadian Underwriter, is what kind of efficiencies and things are we providing our customers during this time to make sure business can be conducted, to make things convenient in the social distancing quarantine reality, and what's going to be permanent? I
would think, and just even a package relating to BI that could come out of this, that's clearly a premium that needs to be collected. It can't just be included in existing coverages.
Yeah.
If we're looking now and saying how many times over the next 20 years could this happen, or 50, whatever actuarial figures that get used, I mean, it's pretty obvious that something's going to have to be collected here. We saw that post 9/11. We've seen that in other scenarios with, for example, flood on commercial policies where it used to be picked up. Now we're seeing more premium being collected. So, yeah, it's definitely a real change to the industry, and maybe for the better.
Yeah. So let's look at that for a second. What if, remember we used to think about things where you're going to have specialty lines, brokerages and agents and agencies who just deal in certain classes of risk. So if you have to detach BI from a commercial insurance policy, Is this an opportunity to build a separate risk rating just for BI that's now like, it's like an a la carte thing? And eventually your commercial policy, you start with CGL based on your class of business, and then you maybe have all these different either endorsements or separate companies that will specialize in something like business interruption added on as like an a la carte kind of creation. Next thing you know, you built your total policy via 4 different companies to build the complete thing.
I guess that just really shows you how strong the market was over the last 10 years when, like you say, Pete, the feeling was BI coverage was built into a policy. You know, those type of companies may actually see a big surge because now they can build out more products that are built for this scenario.
Yeah, exactly. That's how far we've come because everyone knew it, and you bought those things for equipment breakdown and different stuff. And now it's going to be, when it comes to business interruption, where it could be exactly that. You're selling a totally different thing that's a piggyback on it. It's going to be fascinating to see. And, you know, how people do the selling and stuff too. That kind of leads into the idea here of what we're seeing with other companies versus newer companies, I think, in that we have these new entities, whether they're Insuretech, an Insuretech service, or a brand new insurance company, which has different kind of funding and financial backers in it. Are they able to do what the tried and traditional insurance companies are, which is adjust premiums based on a new rating reality of no one driving anymore? We're seeing auto rebates coming across from our big carriers. Can Insuretech do that? I don't know.
I think it definitely is a must that bigger insurers have to be getting really serious about treating consumers fairly who don't use their cars like the average family that may put on 25,000 kilometers a year.
Yeah, that's exactly it. And will this happen in other capacities? So sales is a big driver of risk in the commercial insurance, right? Your volume of sales, where you sell, where your product goes, all sort of gives indications on how big a risk you are to have a claim on certain things. So if your sales are dwindled down to nothing, should you not be getting something back?
Mm-hmm. Bingo.
It's going to be curious. And if you've gone through a very a smaller company and done something who's doing innovative tech or whatever, are they able to adjust that way? Like, does their reinsurance treaties even allow them to? It's going to be fascinating to see how that shakes down.
And all that at the same time that even the small businesses themselves are shaken down to who knows what, right? So, watching this market come back from a stock perspective, they're expecting, that this will be a W, not a V, not an L. So where is the next big drop? Will that drop take out another group of potentially what were decently strong businesses within the marketplace? Who's left? Yeah, I guess is the question.
So here's another thing. We kind of talk about some things we want to go from before, and this just popped into my head, but I don't know if you saw some of the news that was coming out yesterday out of our friends to the States with their small business program that's come out from the federal government, but companies weren't able to access this gigantic pool of money, yet some were. What happened, all the stuff started coming out when the pool of money dried up, and it was discovered that Shake Shack, a national chain, was able to access $10 million. How does that help small business? There was another one I saw where one guy and his found different companies. He owned a sub chain in some place, I think it was in Florida, that served sub sandwiches. I saw a printout of the access point, and he'd accessed something like 10 times different $50,000 loans or whatever it is in the U.S. So small business is the foundation of an economy. You don't have small business, you have nothing. And when they can't access things because it's complex, it's stacked against them, it really says that governments aren't paying attention to what's going on. And being at the top of the heap in the U.S. is a totally different thing than it is in Canada. But, if you're the business president, you're the guy who knows everything about business, and a few other things, according to him. Shouldn't you be thinking about all businesses, not just the brand names that you know? And that's kind of troubling, because that's where I think we talk about the economy and bouncing back and such. When the right parties don't get the money, there's a recipe for disaster.
Oh, and sure, we're going to see a lot of that happen here in Canada too, because there's an element of people who are self-employed that are so busy doing that they don't have the time to step back and look for support. And that's tough, because they're just trying to keep the lights on. They don't have the energy to sit and, search the web for various applications that exist to get some form of support. It just sometimes means they don't have the energy for it. And that's sad, because you're right. The sort of the medium to large companies may actually get more of their share.
Yeah, exactly. It's going to be fascinating to see. So I don't know. I think that's it. That's your roundup.
That sums it up. You bet. Everyone have a great week, and thanks again.
And stay claim free. I don't know. We're going to have to come up with something to wrap this up with. We need
a closer.
A closer. There
and
you go.
Not we're going for a martini. Okay.
Yeah. A quarantini.